Good morning, traders from whichever side of the country world you're watching me from. Welcome to today's morning market call. I'm sorry that you're not able to see me today. I'm having difficulty with my camera, but the music has to go on. Les Boy, welcome to the stream. Now, quick disclaimer before we do begin: the information herein is only meant for educational and informative purposes only. None of it should be construed as investment advice. Trading the financial markets do carry a degree of risk, but do not worry. I'm here to help you look at the markets the right way. Once again, I'm really sorry for my camera not being able to work today. Now, starting off the day, when you go over to our HFM platform, we do have a few promotions that are currently ongoing. Now, last week we gave away almost $8,000 to you traders in the spirit of 15 years celebrating, providing traders with the right platform, with the right resources. Now, we do have Battle of the Elite round number 2 currently ongoing. Once again, if you go over to our HF website, under the promotions segment, we do have Battle of the Elite round 2. When you click on read more, it's going to open up a new tab for you whereby you have an opportunity to become Kenya's Don Wabis, claim the crown, win 650,000 Kenyan shillings. We are going to have 13 winners in the draw, whereby number 1 is going to take home 650,000 Kenyan shillings. Number 2 is going to take home $2,000. Number 3 is going to walk home with $1,000. Now, the promotion has just started recently, and it isn't too late for you to get started. Now, we are going to have 10 winners in the lucky draw, each walking home with $200 each. Now, if you look at how you're going to join, you go over to your HF under the promotions, Battle of the Elite, round 2. Open a Battle of the Elite trading account, deposit at least $100. Now, trade any asset and rank in the top 3 traders by percentage-wise of profit gain to win a cash prize. Now, looking at the leaderboard, currently at the moment, we have Sami with 47.65%, number 1, and Mohammed with 15.31%, number 2. Meaning, if you deposit today $100 and you just make $1 today, you are going to be in the leaderboard. There's a chance for you to win the prize pool. Not only that, we also do have the first 5, whereby there's a 325,000 Kenyan shillings prize pool, whereby the competition is going to run till 22nd of this month, and you have an opportunity to sprint and win in the markets with HFM. Now, how do you join once again? It's not only a marathon, it is a sprint, ladies and gentlemen. You go over to your HF promotions, the first 5, round 2, and join the promotion. Trade 150 lot size in Forex, gold or silver using any account type. Be one of the first 5 traders to complete the trading requirement by 22nd of October. What about the $100 we won during the Traders K event? It's over a week now and no communication. Don't worry, Mikey, it shall come. Be patient. Be patient. Your money will come. Okay, money will come. Now, getting on to today's segment on the morning market call. Remember, when we were going to generate our ideas from, you look at the economic calendar, ask yourself, how am I going to plan myself better in the day? Now, looking at what happened at exactly 3:30 a.m. in the morning, before that, we do have IMF meetings today. The entire of the day, they are going to be in the United States, whereby I want us to look at this article. For World Bank, the only certainty today is uncertainty. Quite interesting. Now, the World Bank IMF annual meetings does kick off today amid uncertainty, plus a major foundation pool it grants from US organizations. Now, all eyes will be trained on the World Bank and IMF as they kick off their annual meetings. And what do we have to look at these people? Not long ago, the World Bank declared it will embark on an ambitious reform agenda. While it made some strides, today the bank seems to be less vocal about any grand reforms, preferring to quietly push through whatever it can in this moment of geopolitical turbulence and, of course, Donald Trump's history appending US presidency. Now, one thing to expect, there is going to be a focus on jobs, a banger priority, and on crowding in more private capital. Both are urgent in this time of diminished foreign aid, but both are also safe no-brainers, unlike more controversial issues such as climate change, Trump's bête noire. Now, the Trump administration has been abundantly clear that it wants the World Bank and IMF to return Two, what it views as their core missions. For the former, it's poverty alleviation and private sector-led development, and for the latter, it's sticking to fiscal and monetary policy. We will want to look at how the developments are going to go around as the day progresses. We are seeing a lot of activity during London session, and we're going to go into the charts in just a moment's time. But going back to the economic calendar, we did have Reserve Bank of Australia releasing their minutes of their recent meeting that they did held recently, now at exactly 3:30 a.m. today. If I do click on that title, it's going to bring me a short description, and if I do click on the read official report, it's going to open a new tab whereby it's going to, this is the official report that was released today. Now, the most important thing about these minutes is you would want to look at what they have in store for the future. In this particular case, we are looking at considerations for monetary policy. After everything that has happened, what do they want to do in terms of setting monetary policy? Now, looking at it from this perspective, inflation was to return to around the midpoint of 2 to 3% target range, and for conditions in the labor market to be little changed at around full employment over the forecast period. Now, they observed that these forecasts were based on the technical assumption that the cash rate follows the market path, which at that time implied 3 further 25 basis points cut. Very important, which at that time it did imply 3 further 25 basis points cut, including August, over the year ahead. Now, looking at these minutes, yes, we do anticipate the Reserve Bank of Australia to continue lowering rates in the near future by at least 75 basis points in total. Now, if the central bank is going to lower interest rates, it means we are going to anticipate a weaker economy. If we are going to anticipate a weaker economy, meaning the long-term trend on the Australian dollar is likely to be headed towards the downside. Now, since the August meeting, private demand has recovered a little bit more quickly than expected, given outcomes from the June quarter, national accounts, and early indicators for growth in demand in the September quarter. In the labor market, employment growth has slowed in August, but the unemployment rate has been steady and the conditions overall appeared to be little changed. Now, members judged that the labor market was still a little tight and noted that forward-looking indicators were not signaling any material change in the near term. Now, looking at what they discussed, the decision, this is the most important thing, the board decided unanimously to leave the cash rate unchanged at 3.6%. But we have seen they are going to have 3 more interest rate cuts in the near future, meaning when we look at the Australian dollar, the entirety of 2026, we do anticipate at least 25 basis points cut each meeting for at least 3 times, which means once again, we shall be looking at a trend to the downside when you're looking at the Australian pairs. Going back to the economic calendar, at exactly 9 a.m., we had the harmonized index of CPI data, the year-on-year released for the month of September compared to last year, September, whereby the inflationary numbers did come out as anticipated, 2.4%. Now, once again, if you click on the read official report, it's going to open a new tab, and this was the official document that was released. Okay, now inflation rate is at 2.4% in September of 2025, as inflation did rise again, particularly due to the above average increase in service prices. Now, looking at it, CPI numbers for September 2025 is up 2.4% on the same month a year earlier, and it's only 0.2% on the previous month. Now, the harmonized data, there is usually 2 sets of data that are released. The first one being the core, which is going to exclude food and energy, which are very volatile. And then we are having the data that is going to include the food and energy. Now, looking at the inflationary numbers, we have been seeing a peak ever since June of this year, whereby June's number was 2.0%, and we have seen inflation starting to pick up in the Germany region as of late. Now, when you look at this information, this is going to have an impact on what the European Central Bank are going to do, whereby if they see interest rates are too high, they would want to raise interest rates out of respect of the inflation containment mandate, because they would want to now discourage borrowing and encourage spending. But on the other hand, if they see inflation numbers are going way down, what they would want to do is lower interest rates, whereby they would want to now encourage borrowing and discourage investing at the moment. Now, looking at energy prices, remember once again, when you're looking at Germany, we are about to enter into a period of winter, meaning we do anticipate energy to uptick to the upper side slightly. But looking at it currently at the moment, we have food prices did stand at 2.5%. In particular, the price of sugar, jam, honey, and other confectionery is up 6.5%. The fruit market did rise almost 5.1%. And if you look at statistics from Kenya, we did export the biggest share of fruit exports to the European region last month. And we can see these reflecting also in Germany's data. But looking at development of prices for goods and services, CPI numbers once again did come out at 2.4%. The services numbers did come out at 3.4%, and the good number did come out at 1.4%. Now, looking at this, how is it going to affect the euro? We are going to look at it in a few moments' time. Now, continuing to 9 a.m. once again, we did have Germany releasing the employment numbers, whereby it was slightly worrying. Looking at the unemployment rate, we were looking at a previous number of 4.7. The consensus was at 4.7. The data actually came out at 4.8. The employment change 3 months to August, the previous number was 232,000 jobs being created. We have seen only 91,000 jobs being created. Now, if I do click on this title here once again, it's going to bring me a short description of what this is. But generally speaking, a decreased figure is seen as bullish, because the lower the unemployment rate, the better it is, while an increase is seen as bearish for the United Kingdom. If I do click on read the official report, it's going to open a new tab whereby we have an opportunity to look at the main points. Now, the latest data estimates for payroll employees in the United Kingdom fell by 93,000 jobs, which is almost 0.3% between August of 2024 and August of 2025, but increased by 10,000 jobs between July 2025 and August of 2025. But when we are looking at August of this year, the period comparable with our labor force survey, which is the body in charge of releasing this data, estimates payroll employees fell by 115,000 jobs over the year and 31,000 jobs over the quarter. Now, the yearly estimate of payroll employees for September 2025 decreased once again by a significant amount on the month to 30.3 million. So we are looking at people in Britain losing jobs. The economy is not generating as many jobs as possible, and we want to look at the charts. What does this mean for us traders? How can we look at these opportunities? Now, switching gears to what is happening currently at the moment in terms of dollar, Bitcoin, gold. And there's this article from the CEO of Citadel, one of the biggest hedge funds in America, whereby following a striking shift in confidence in global financial markets, Ken Griffin, who's the CEO, has warned that investors are increasingly moving away from the US dollar towards Bitcoin, gold, and other assets as inflationary pressures and fiscal uncertainty erode faith in fiat currency. Speaking at recent investor forum, Griffin, one of Wall Street's most influential voices, said the trend reflects a growing skepticism about the US government's fiscal discipline and its ability to manage ballooning debt. The billionaire hedge fund noted that both institutional and retail investors are diversifying into non-sovereign assets to hedge against the potential dollar depreciation and global instability. According to him, people are recognizing that the dollar, while still being dominant, no longer feels invisible. Bitcoin, gold, and even silver are now viewed as stores of value in a world where monetary confidence is fading. Now, China has been buying gold. Currently, at the moment, they are at a record streak of 11 months of continuously buying the precious metal. Now, we have just broken a region on gold we have never thought it would be possible. Even after record setting, the prices of gold appears poised for further gains as China's central bank extended its gold buying streak to an 11th straight month, and demand for safe haven asset continues to grow amid an ongoing US government shutdown. Now, gold prices currently are trading above 4,121 as per the time of this recording. The surge comes as investors seek reliable sources of return in an unpredictable global economy. Assets backed by the US dollar long regarded as safe bets, have lost some of their appeal, particularly as Washington marks the second week of a shutdown that has frozen most of the government services and delayed the release of crucial economic data. We have not yet received NFP numbers for this month. We have not yet received inflationary numbers for this month. So has the commitment of traders has not yet been updated as a result of the government shutdown. Per a report from Reuters, investment bank Goldman Sachs lifted its gold price forecast for December 2026. And this is a very interesting number to look at. $4,900 per ounce, up from $4,300 on Monday, citing inflows from Western exchange traded funds and the likelihood of further central bank purchases. Meaning, we have a forecast of $4,900 an ounce by 2026, meaning it could be possible to see gold prices even move to $5,000 an ounce by the end of this upcoming year if everything does persist as the way it is going currently at the moment. Now, looking at another article here, whereby why is gold buying? Once again, we have looked as investors are seeking a safe haven to park their money as the US government shutdown does persist. Now, how much has gold prices climbed this year? Gold futures are up at least 50% since the start of 2025, trading at around $4,000 per ounce as of New York time. This was Tuesday. Currently, once again, at the moment, we are trading at $4,121 an ounce. That is up from $2,670 seen beginning January. Now, moving over to the Middle East, Trump has set his eyes on a peace deal with Iran as he hails the end of Gaza war. This was quite interesting, noting Donald Trump once again has vowed to use the power of his presidency to ensure that Israel recognizes it has achieved all that it can by force of arms and begin an age of cooperation in the Middle East that may ultimately extend as far as peace with Iran. Now, in a speech to the Israeli Knesset, made hours after the last remaining Israeli hostages were released from Gaza, Trump hailed the historic dawn of new Middle East and the end to the long and painful nightmare of the Gaza war. This is not only the end of the war, this is the end of an age of terror and death, said the United States President. Israel, with our help, has won all that it can by force of arms. Now it's time to translate those victories against terrorists on the battlefield into the ultimate prize of peace and prosperity for the Middle East. Now, repeatedly insisting that Israel's military victory was complete, Trump's remarks were intended as a reassurance to Arab states that he will neither allow Israel to reopen the conflict with Hamas nor permit Hamas to reestablish itself inside Gaza. It is now time the rebuilding does begin, and we want to look at prices of oil, what this has as an effect on oil prices. That is going to be for the news articles. This is whereby I do believe we are very interested in the moment we want to look at charts. And I have just started a segment whereby I would want you to engage with me. Which are some of the assets that you want me to analyze? Do you want me to look at gold, commodities, indices? What assets do you want me to analyze? I would want to start with the precious metal, gold, currently at the moment, whereby, remember yesterday during the morning market call, prices was trading below the 4,000 region, and we were looking at a possibility of prices going to $4,100 an ounce, of which it did break that region and did flying to the upper side. We had some bears coming into the markets during pre-London. This was around 9 a.m. in the morning, 8 a.m., 9 a.m. This is Nairobi time, whereby we saw gold prices actually move quite significant. This was almost 900 pips to the downside in less than 2 hours of trading. 874 pips to be exact, almost 2% of its total value, coming just shy below $4,100 an ounce, and then currently at the moment it is retracing back to the upper side. Now there is more move to the upper side. The ceiling has been broken. Currently at the moment when you're looking at gold has never been on these territories ever since the beginning of time. If you look at the charts, looking at where we have come from back in 2019, whereby gold was trading just shy about $1,200 an ounce, and we have seen the markets aggressively move to the upper side, and we have been seeing institutions. We have just looked at Citadel CEO Ken Griffin mentioning about, yes, institutions, investors are moving to the safe haven metal as a result of the uncertainties that we are seeing in the markets. If everything does persist the way it does currently at the moment in terms of the US government shutdown and the tensions of tariffs between America and China, we might anticipate prices to continue moving further to the upper side. Looking at it on the 1 hour time frame, I would want to look at prices, how it's going to react to this closing price of this 1 hour candle. Yes, we have seen bears coming into the markets, but buyers have driven the markets back above $4,100 an ounce. If we do close above that region, I would want to look at more potential price pulls to the upper side, potentially making a new all-time high. Looking at it, this is almost 570 pips away, more or less 600 pips. If you use a 0.01, you know the mathematics. If you use a 0.1, you know the mathematics. But once again, whenever there's an economic uncertainties, whenever there's volatility in the markets, for you as traders, the most important thing is to practice risk management. Always ensure that at the end of the day, you do have an account, because that's the number one goal of a trader: capital preservation. Now, looking at it from this range, if we do break below these lows, I would want to look at more net selling opportunities. If we get a candlestick that closes well below this region, I would want us to look at the silver metal, whereby currently at the moment it's trading about $50 an ounce. We have never been on this region. And okay, Jason, let's go. You want us to look at GU and UJ? Okay, we shall look at that in just a few moments' time. Now, silver metal could be the next big thing after gold currently at the moment. We have seen a lot of investors starting to park their money into the precious metal. Even if you look at palladium, palladium is on the upwards trajectory currently at the moment. We have seen palladium trading at $1,483 an ounce. Quite interesting. Most of the metals currently at the moment are trading well above their all-time highs at the moment. Silver, once again, trading at $52 an ounce. And at the moment, I want to look at how price action is going to play out, whereby we have seen the markets rally to the downside quite aggressively. But look at how this candlestick closed well above the opening price of today's opening candle, whereby this was almost 153 pips to the upper side retracement just on this 1 hour candle. If you do get signs of buyers coming into the market, breaking potentially these highs around this region, I would consider looking for net long opportunities on the silver metal. Now, looking at GBP USD, now once again we have seen data coming in negative for the British pound just a few moments ago. Beautiful. Now, the data did come out negative. The employment numbers did come out negative for the British pound, whereby the United Kingdom are actually losing more jobs compared to creating jobs. We did see the markets enter into a period of consolidation yesterday, but looking at it today, prices made a high, failed to break the most recent high. If I can highlight, this is the high. It failed to break these highs. And when the data came out negative at exactly 9 a.m. today, which was this particularly candle, this beautiful candle, as you can see, it doesn't have any wick to the upper side. And when the data came out negatively, we massively moved to the downside, almost 72 pips in less than 2 hours of trading. Currently trading at 1.32680. I would want to look at how prices is going to react to this region here, which is the most recent region of support. The prices did form back on Friday, whereby this was the lows that was made on Friday. If we do get candlesticks that close well below this region, I would want to look at more net selling opportunities on the British pound. But if you do get a candlestick that breaks to the downside but closes above this range, I would consider prices moving slightly up, coming to fill these inefficiencies that we have residing below this region, around the 61.8 to the 50% region. Looking at US dollar against Japanese yen, now, tomorrow is when Takaichi is going to be sworn into office, and it's going to be very interesting, providing us traders with opportunities to look at what could happen next. The most important thing is we want to listen to her tone. What does she have to say about the future economic outlook? Where does she feel the markets will head to in the near future? Ever since the elections were done, we did see the US dollar against the Japanese yen move to the upper side. Currently, we are retracing. And if the speculators have it that, yes, She is a fan favorite of having low interest rates, but that will not deter, it will not sideline Bank of Japan from increasing interest rates in the near future. If she does mention that it's high time we raise interest rates in the Bank of Japan, then this means we might anticipate a stronger Japanese yen compared to the dollar, potentially coming back to fill in these inefficiencies that we have residing below this region. This is almost 280 pips away, almost 1.85% of the total value of the dollar against the Japanese yen. Once again, this is going to be dependent on what is going to happen tomorrow for the Japanese yen. Looking at the Nikkei 225, the Nikkei 225 is in between. I do believe this is the 50% region from this high that was formed to this low, currently trading below the 50% region on the Nikkei 225. And I would want to look at oncoming data. What does she have to say tomorrow to the markets? Where does she believe the Japanese yen is headed to in the near future? Now, 21 Forrester wants us to look at XAUSD and BTCUSD. I do believe I've looked at gold. At the moment, that we are still waiting on regulations from the government so that we can add Bitcoin back onto our charts. But it will take a bit of time. As you can see, I don't have Bitcoin on my chart here, but it will take a bit of time. If I can pull up a chart of crypto currently at the moment, we did see quite the interesting activity happening last week as a result of Trump posting his tweet, and he did mention about the 100% tariffs that he is going to enact to China. And it's a tug of war, because when you look at it, China has rare earth materials that the United States needs so bad. Actually, China accounts for 92% of the total processing of rare earth metals in earth. Almost 92% of processing of rare earth metals. Now, on the other hand, what does the United States have? The United States has technology. It's a battle between who's going to bow down first. Looking at the S&P 500, currently at the moment, we are gaining back. NVIDIA is up 2.81%, Apple is up 0.97%, Microsoft is up 0.6%, so is Google, so is Meta, so is Amazon, so is Tesla. Yesterday, we did see these markets quite aggressively to the downside. Looking at it on the weekly, yes, we are currently moving back into green territories. And this is something normal that we have been seeing in the past, whereby yes, the markets have fear. We see crypto indices move to the downside, but it reaches a point whereby, okay, the markets digest these as people will come back to the table. They'll start talking about it. Looking at the crypto market, Bitcoin is down 2.96%, currently trading at $112,000 a coin. Ethereum is still down 4.17%. But if we look at it on the daily perspective, where's the daily? Okay, so this is the daily. I want to look at the weekly perspective. Bitcoin is still down 10% on the weekly time frame, okay? But currently at the moment, we are retracing back to the upper side, whereby there is potential that it could start retracing in the near future. Okay, are there any questions currently at the moment? We don't have any questions. That's going to be it for me, ladies and gentlemen. Once again, as a trader, there are so many opportunities for you to trade in the markets currently at the moment. The most important thing for you as a trader is capital preservation, risk management. Always ensure with these probabilities that are happening, you live to fight another day. That's going to be it for me. Take care of yourselves. Stay safe. As such, I shall see you in the next segment, which is going to be tomorrow at a similar time. Hit the like button, hit the comment chat. Adios.